Morning and welcome to another edition of Roadhouse Last Call. Binda, how's it going there, Binda?
Good morning.
Binda?
Can you not hear me?
Fuck's now I can hear you. There you are.
I
About
said
to have to.
I said good morning.
Oh, we get the good.
Yeah.
We get the good
Yeah.
morning. Wow. All
Hey,
right. Well,
I found out today that
I
there's no more inflation, so that's good.
well, you might want to take another look.
Okay. Damn it. Damn it. You're gonna ruin this, aren't you?
You hearing crickets?
That is not my desk. Full disclosure.
There's Stockington.
No, I might have hit a button. Sorry. So you're gonna give me bad news, aren't you?
No, I'm not.
Oh.
No. Not going to give you bad news. I don't know that there's any bad news anywhere within the data. I don't know that there's bad news there. Data came in about as well as anybody could have desired, as far as seeing inflation ease, and I think that's the main point and focus is seeing inflation ease. Now, if that number comes in, over expectation, then, we're taking the stick right now instead of making this move to the upside. So the point is inflation is easing. There's a couple of things that we need to take a look at, and kind of understanding this. The dollar absolutely just rocked on the data release, and it continues to get bludgeoned down. The dollar has been the safe haven going back really over a year. So I think kind of getting an idea of where the dollar may want to try to find some support is going to help us quite a bit as far as getting an understanding of what's next. We also know that they have been literally selling the VIX like absolute madness over the last month. Really the last 3 months, if we're being fair. They've been selling the VIX down pretty heavily. So while inflation has cooled a little bit, it is still, by definition, historically high. Right? So it's like we have to take it, we have to apply context to where we are. Inflation is not at a, 3-year, 5-year, whatever low. And inflation, I think, is still at a multi-decade high. But it's moving in the right direction. And I think that that's where the victory comes in, is the fact that we can start actually seeing that maybe we do indeed have peak inflation. Maybe we do indeed have, a move in the direction that's going to be beneficial for equities. I think that's how we have to look at it. Now, if I'm the Fed, and again, this is me making some assumptions, I'm looking at this data coming out saying, okay, this is me interpreting them. This is not what I actually believe, just for the record. The Fed basically coming down and basically say, hey, everything that we're doing is working. The job market is still holding. We have more room to raise rates. We can continue to raise rates because what we're doing is working. We can raise rates as long as the job market can hold it. And based on the last jobs print, they have every reason to do it. This was a nice pull, but we have to understand what inflation came in at, what, 6%, 6 point something percent, something like that. Is that what it was? I don't have it sitting right in front of me. Their target rate is 2. So we have to apply, context to where we are historically, what it is now, and what they may or may not be thinking that they can get away with as far as rates moving forward. So I'm not giving you bad news. I'm just saying that this good news should be taken in stride. As far as, yeah, no, finally, we're not taking it in the face. Finally, we're not getting our asses beat. We're not winning. We're just not getting the shit kicked out of us like we were 2-3 months ago. That's the context that I believe needs to be applied to this release. Is that fair?
I think that's fair.
All right. So this number does not help the fact that semis have been guiding down. It just does not help that. Does not help the fact that earnings have not been good this quarter, for the most part. And the earnings that were released last night were not exactly spectacular either. So instead of kind of cutting through all that, I think we have to look at today and even the news that came out yesterday. We have to basically, in a lot of ways, almost erase everything that has come out before this print and kind of evaluate. I think the most important thing we can do this morning is spend time evaluating these levels on where we are. Maybe possibly, if you could, kind of charting out the dollar a little bit at the same time, Bender, to give us a little bit of context on what to look out for. Because we have seen some pretty thick reversals take place off of good news, off of bad news, off of dovish Fed, off of hawkish Fed. We have seen some pretty gnarly reversals. So I think we need to be prepared for everything from the upside and downside. So I'm going to kind of flip this over to you a little bit to kind of dig in. And I know I'm dropping the dollar on you last minute to kind of chart out, but would really love your thoughts on where it's sitting after this spill out. So,
Well, it's
buddy,
sitting
what
at
you got?
previous resistance. It will take me a couple minutes to throw some lines on that chart. So let me start with ES, and I'll go through those levels, and then Stockton can go through what he's watching, and while he's doing that, I can try to put some lines on the dollar chart. So obviously, huge gap up after 8 days of very tight price action. In fact, yesterday was, if not the tightest range that we've traded in all year, it's very close. When I was looking at it, early in the afternoon, it was the tightest range we had traded in all year intraday. So now we've got some range. Hopefully we get some more range today. We did briefly pop over 4,200. If we can hold some of this move, I think 42.25 is going to be key. Now, resistance comes in a little earlier than that. 42.20, 42.22, right in there. 42.25 to kind of get above that. That gets us above a previous trend line that was acting as support, then acted as resistance. I'll post that chart with that line on it. There's also a fib there, 42.22. So that's kind of a key area that I'm going to be watching if we can continue up. If we don't, or we pull back, profit taking, I've got 41.85, 41.87 ish. Previous resistance 41.72, previous resistance, you want to see that act as support, but the big one, that 41.54 fib, there's a fib there that was also previous resistance, has been a huge area of interest. So on a pullback, if we come all the way down to those 41.50s, they're gonna probably try for the gap fill, but I'd really like to see that area hold. If nothing else, there should be a bounce there. It's hard. It gets tricky trading on these gap up days, right? Because it's challenging to buy the open or near the open, because in the back of your head you're like, oh, they're gonna pull this back. They're gonna dump it on us at the open because people want to take profit, and there might be some of that. That doesn't mean that the whole thing has to fill today. Sometimes we see gaps in the chart that last a really long time, right? So just keep that in mind. Let's find a level. Let's wait for the setup. Let it shake out, I think, at the open, and then pick a level and play it, because gap may fill, gap may not fill today. So I think those are the levels on ES. I'll let Stonkington talk about what he's watching, and like I said, while he's doing that, I'll try to throw some lines on a dollar chart.
All right, let's do it. I posted my ideas, but let me see if I can get some charts in here to back them up. Apple, I had a fib up here at 168.25, which is exactly where Apple stalled out market. So I would be using that as a call trigger. And then I had a dark pool below on Apple at 166.39. That was 1.37 billion that we saw from 2 days ago, Monday. That's what I'm looking at on Apple. I'm kicking Cat off the list because that idea got invalidated. Because it was a daily inside bar and looked like bear flag on a longer time frame, and with this, so whatever. See you later, Cat. Amazon, I had a lineup. We'll just use pre-market resistance was 142.45. It's sitting on a dark pool, the one from the other day right now. That was 258 million from August 8th at 141.96. So we'll see, the reaction there, and then had a line to the downside at 140.5. I believe that was my original call trigger, but then we gapped. So Amazon, I'd be taking the chart if it breaks below that, and then AMD, bring AMD back on the list. So had a line above 99.1, and then the downside, I'd be looking to potentially take AMD short at 97.8. That's been a line that's come into play in the past. We'll just be reusing it. But that's what I got as far as levels. I don't know, Bender, you still doing your dollar stuff? Or how do you want to talk about Mr. Musk?
Take me a couple minutes.
All right, so let's cover a few other little things here and there. So Elon's been selling Tesla the last few days. He has said that he is officially done selling. He's trying to get out in front, according to him, of being forced to buy a Twitter. So he has been selling. Tesla is up massively pre-market, massive up on it. For the day, which is, obviously everybody knows that I am very bullish on Tesla. So yeah, level of happiness there for me. But at the same time, I definitely reduced my overall position last week around 9:30. So we'll see how the day kind of shakes out. Semis are interesting. It's interesting that conversation came up again. You brought up AMD. This number, this CPI number, does literally nothing for the guidance on semis that they put out there the last several weeks. Does absolutely nothing for it. With that being said, let's see what the flow says. The flow said semis would pull back starting last week. Let's watch that. Let's see that action. If they come in and they close out a bunch of SMH puts, if they're buying NVIDIA, if they're buying Micron, if they're buying this dip with both hands, further dated, not scalping, but further dated, then we really have to look at it from the standpoint of, what, even their guide down is priced in. We have to have an understanding of what the flow is trying to tell us. So we have to be fair and honest, and even if we're in a position to where what, they got it down. It's like, yeah, no, they got it down. And there's still a lot of them 20, 30, sometimes 40% off of their highs. We have to apply context to everything. And just because we feel a certain way, we cannot act on that and feel like we're owed something because we have a feeling about something. We have to play what we see. You have to have a firm understanding of what the money is saying, and that's what BBS flow is, telling us what the money is saying and thinking. So let's keep that in mind as we work through the day. A couple other news items. We do have data tomorrow morning. I believe we have PPI coming out tomorrow morning. I think we have jobless claims also. Today we get wholesale inventories for June. We'll be out at 10 a.m. I think that's something to take a look at and understanding, because there has been this constant conversation of inventories doing nothing but stacking and getting thicker and thicker. Let's see if that data holds. We also have a Fed speaker day. Evans will be speaking at 11 a.m. Eastern. I think that could be an important conversation with this number coming out to see if he's coming out more hawkish or dovish. You know, Fed speakers coming off of data, I think that's going to be important. So we have Evans at 11 a.m. I think that should be something that everybody is paying attention to when he takes the mic. We also get U.S. Treasury budget statement for July will be out at 2 p.m. today. So we have additional data throughout the day. There is no doubt, no question that we should be looking at this from a glass half full standpoint as far as inflation easing back. We should view it from that standpoint. But we should also have some respect for whatever the flow is going to tell us over the next couple of days. And we should also be very wary of any type of give back on this gap. We have to be wary. If they're giving back and these levels that vendors put out there doesn't hold, and we start looking at a level below and it doesn't hold and that doesn't hold, all of a sudden we're sitting upside down on the day. And at the end of the day, we may be scratching our heads going, well, what happened? We were at 418, now we're at 410. Take everything in stride, both good and bad. Benda, you done doing your drawings with the crayons?
Yeah. Yeah. So to really get good lines on here, I'm going way back. So here is a weekly chart showing a couple of, trend lines of support and resistance. But what I want to pay attention to is that parallel channel in the middle, because that's where we're at. So let me zoom in here on a daily, and this will show that parallel channel along with a more recent one. Let me post this. This is without obviously any moving averages or anything, just trying to look at the longer term, sort of trend of the dollar here. All right.
I think the dollar becomes really important to pay attention to, Bender, in a lot of ways, because during this downturn, going back to last spring, when you really started looking at it, the dollar has been the overall safe haven for the market. It wasn't gold. It wasn't materials. It wasn't commodities. It wasn't any of those things. It was indeed the dollar. That was the hedge. So for me, kind of charting the dollar, getting an idea of it, especially when you have a move like this to where it just absolutely shits itself, it's awesome to know where we are and know what to look for.
Well,
explain some more.
I think that, so I started with the weekly. The chart I just posted is the daily, and you can see that longer term parallel channel. We are right at the midpoint of that. What are we at? 105.15. The midpoint there comes in 104.99 ish. It's interesting to find ourselves right here, because if you go back to, so from 2018, May 2018, all the way till January 2020, we bounced around in that parallel channel. And then when we had that COVID drop, we came down to 94.70 is that white trend line, and then popped back through that parallel channel to 103.64, and then we came back down and traded in that channel for a little while. Not long, but we spent about a month in there. And then when we finally gave it up and fell out of that channel, we came down, tested that white trend line, gave that up, and came all the way down to that longer term, that purple trend line down at the bottom, down in the 90s. And then we, messed around with that trend line a couple times. After coming out of those low 90s, 92, we just kind of waddled our way back up, and now we're in that shorter, the shorter term parallel channel. We kind of bounced around in there, fell out of that, and now we're right back in that longer term channel that we spent, several years in. So I think that channel is kind of where we would expect to kind of play around in for a while. So I think the trendline support and trendline resistance and that midpoint that get created from that longer term parallel channel, I think, if I'm watching anything on this chart, that's what I'm watching.
Okay.
That's what I'm watching.
Okay. So if we're playing gun to head, and you're seeing this, let's take the name off of it. This is just a chart hanging out there. Okay. Gun to head, would you be looking to buy or sell this?
I would be looking at this, I would be probably looking to sell it down to 103, call it 103.70 or so. You could look at this and go, okay, well, this is, a pullback to support and the midpoint of that channel. It's kind of no man's land at the moment.
Mm-hmm.
I'd want to see some confirmation that, this move up is going to continue, but it fell out of that shorter term upward channel. It fell out of that. So if I was, looking at this as a long, it would have been around 106.60 when it was at that trend line support. It also would have been above what was resistance in that longer term channel. That's where I would have been looking, and then as soon as it broke that, it's like, okay, well, now I gotta wait, for it to come back down, and see where it's gonna find footing.
Okay. Thank you. Thank you very much for all that. So look, does anybody have any questions on what we've covered today? Does anybody have any thoughts on how we're trying to approach this market and look at it both from a flow standpoint, from the chart standpoint, looking at some of the variables that we kind of track and watch intraday, whether it be the dollar, the VIX, or the ES or anything else? Does anybody have any questions regarding that before we close it out and move on? Do not believe we have anything. All right. So we have about 15 minutes until open. Let's get ready. Today should be interesting. Big gaps, you definitely give us some room for activity. Bender said yesterday was one of the tightest trading days he's ever seen. So we can loosen up and rake some cash. Everybody who's listening, thank you so much for listening in. Bender, thank you very much, buddy. Stockington is walking his dog. So we'll say thank you to him, and we will see you guys here shortly.